Hello once again. How are you guys feeling? Okay, yeah, I know it's getting quite late. I believe you guys have waking up. Yeah, let me hear some noises here. How are you guys feeling? Woo! All right, yeah, great. Yeah, I believe this is the last panel. And then, yeah, first of all, I would like, yeah, of you to, yeah, introduce yourself, yeah, a few sentences and your company.
Right, so I'm ARRAVIND. I'm from Malaysia, right next door. We represent the Malaysian Blockchain Association. We did it, so I'm here with my vice president and my council members. So what we do, we work with the ecosystem in Malaysia. We work with the industries, with the operators, regulators, try to make Malaysia more sexy, more investable. Yeah, so that's what we've been trying to do at least.
Yeah, nice, very sexy, Arvin, thank you. Yeah, next. Yes, Toby?
I'm Toby, I'm the CEO and co-founder of COINWEB. We are a layer 2 infrastructure project. Effectively, we are a hybrid between a roll-up and a cross-chain broadcasting system. We've been in development for a number of years. And as of this morning, the press has just broken out that we have launched our DevNet, a whole load of tools in live production, and a $10 million ecosystem grant program.
Very nice, yeah, thank you, Toby. Yep, SHOGO.
Sure, yeah, definitely. Congratulations, Toby, for the announcing like a 10 million grant that they're really exciting for the accelerating like a blockchain ecosystem all over the world. So myself, SHOGO, again, I'm sitting actually a couple of friends over here, so very exciting. EMURGO is one of the 3 founding members of Cardano, and we are the regional entity in the Middle East and Africa. We set up a $100 million investment vehicle 2 years ago, and then since then we've been investing pretty actively in Africa and the Middle East. We've been invested in 60 plus projects all over the world, but 80% are from Africa, and maybe 20% from the Asia and the Middle East. So I'm very excited to be here today. Thank you.
Thank you so much, SHOGO. Yeah, Jason.
Hi folks, yeah, I'm Jason Fernandez, co-founder of AdLunam. AdLunam is an investment ecosystem. We sort of help projects from zero to IDO, help them in the lead up to the IDO. That involves connecting them with institutional investors, advisors, exchanges, launchpads, and then finally helping them get listed. Basically everything that they need in the lead up to their launch.
All right, thank you so much, Jason. Yeah, today we are going to talk about the DeFi. Yeah, the traditional finance adapting to the DeFi wave. Yeah, first of all, yeah, I'm SOPHIA, head of marketing from BGG, a gaming guild, yeah, in Southeast Asia and global as well. Yeah, first of all, I don't really have a lot of knowledge about DeFi, but yeah, I used to be a DeFi degen before, yeah, back in the day during the DeFi summer. Yeah, I would like you guys to update me a little bit, yeah, lighten me up. Yeah, what's going on in the DeFi space and traditional finance sector? Yes, Arvin.
Right, so I think the traditional finance sector is trying to get more involved in the DeFi space. This is based on my reference point back in Malaysia. You see regulators coming up with consultation paper to learn more about what DeFi is, what DeFi can do, and I think they don't want to be missed out, right? So they feel quite challenged, I would say. And I'm not sure if they are trying to, the intention is for them to explore so that they can improve or help out the ecosystem rather than finding ways to censor it, let's be honest, right? So yeah, so that's what's happening in traditional finance, and on the DeFi side, we see more services, better solutions coming out, making more financial inclusivity to people who are underbanked or unbanked, right?
All right, yeah, thank you, Arvin. Yeah, what about you, Toby? What do you see in the DeFi sector and also the finance sector?
I think it's a bit of a difficult one, really, because I think you touched upon something which is regulators need to provide a regulatory framework so that traditional finance houses can offer DeFi. Otherwise, they just can't. So wherever there's uncertainty, and the majority of these TradFi companies are licensed, they are unable to provide product. And I think if we start at the beginning, and I apologize if there are any regulators in this room, but the vast majority of regulators just don't have a clue. They have absolutely no idea. And when in doubt, we're going to put a lid on it. We're just not going to allow it, which is understandable because they're there to protect customers and users of these products. If they don't understand it, they can't build a regulatory framework around it. So I think there's still, I think Thailand happens to be actually, in the world stage, is very advanced on this. And I'm not just saying that because I want to keep my visa. They've managed to apply a regulatory framework for traditional finance, and they're pushing the boat out to try and now apply that to crypto. And there are definitely some gaps in that. There are some learning curves within that. Hong Kong is going down that road as well. But I think there's still some way to go to be able to educate the regulators, and we must get past the point of whereby it's an us and them scenario. We are the enemy. To be able to build the bridges and to build consensus so they actually listen to the industry, there has to be a level of respect there and consensus, and they must allow us to educate them and to take our views on board. And hopefully that's where we're going to be moving towards as some of the bad actors are now being washed out within the space.
All right, yeah, thank you so much, Toby. Yeah, what about you? What's your point of view on the DeFi space and the finance sector, SHOGO?
Yeah, so we are the basically Web3 VC, so we are definitely attaching the financial space and especially in African. So, but maybe I would give one of the example about how the traditional finance or the regulators is accepting like a DeFi kind of the concept, because DeFi has a very broader definition. I mean, something not traditional or using like a crypto. Maybe we can consider one of the the DeFi. The decentralized finance. So then I spent 6 months in Uzbekistan in 2019 because the Uzbekistan government tried to set the regulatory framework for the crypto exchange and the trading and the holding the crypto asset and by the local people. So then there was no regulation, and the government changed after 26 years of the one dominant president, and then they want to introduce something really new and innovative. And then so that they came to us, and then hey, what we just try to create this, set like a regulatory framework to be accepted by the local people in Uzbekistan. So I spent 6 months, and we made the international task force team, because we EMURGO and also the kind of part of the different the blockchain groups not really enough to set up like a regulatory framework just in the 41 country, but we have so much connection. So we brought a lot of regulatory specialists, blockchain specialists, and a DeFi specialists, and we created a task force team. And eventually, Uzbekistan government accepted, and then so they issued the 3 presidential decrees and the 4 legislations, and then finally the Uzbekistan government can trade, hold, and the crypto asset, and also they're issuing the license to the regulated exchanges, so that regulated exchange can operate perfectly. So I think that's how the government or a traditional financial sector can also work together with a DeFi. And then, but I totally agree with the TOBY in the same, because for most of the cases, the government really have no idea what's a crypto and how did actually the articulating the market. So then maybe they might need to help, and we are definitely happy to help to do that.
Thank you so much, Shojo. Thank you for the insight. Yeah, what about you, Jason?
Sure. So I think it's important to remember that DeFi was created in opposition to traditional finance in the first place. So to the extent that there's an overlap, it is certainly unintentional from the perspective of DeFi and then traditional finance. Well, the traditional finance has tried to co-opt some of the things that DeFi has been successful with. So they've tried to work on things like blockchain and smart contracts and things like that. But I think if anything, it's more of a danger than than something that's going to help the ecosystem. I think one of the two areas that we'll see sort of traditional finance and DeFi have any sort of relationship is in the areas of CBDCs, and then also in the areas of things like Bitcoin ETF, for example. So for example, a Bitcoin ETF will allow a lot of institutional money to flow into crypto. But the flip side of that is what you have then is a highly correlated asset, an asset that has a high risk of contagion with the traditional finance sector, right? So there was a time when Bitcoin was considered a non-correlated asset, so it behaved as a hedge. When things in traditional finance were going a bit crazy, Bitcoin would behave as a hedge. Well, now when you have things like sort of CBDCs and even things like the Bitcoin ETF, perhaps should it get approved, you have a much higher risk of financial contagion from sort of traditional finance and DeFi. So I'm not really sure that to the extent that there's any overlap, that's actually a good thing.
And thank you so much, Jason. Yeah. As we are talking about DeFi and also traditional finance, we're gonna have to talk about the regulation. How are regulators responding to the growth of DeFi, and what implication does this have to the traditional finance institution? Yeah, Jason, back to you.
Well, I think to the extent that regulation has sort of interacted with DeFi, it's been mostly punitive, I think. So I think that there still has a long way to go for regulation to really clarify kind of where they stand on various different areas of the DeFi ecosystem and what would be considered. So for example, there was a long time people were setting up DAOs because they figured that was essentially a regulation-free zone, but that we clearly know that that's not the case. There have been several DAOs that have been investigated by regulatory authorities. So I mean, I think we have a long way to go before I think people have a sort of a decent understanding of where those two worlds intersect.
All right. Yeah. Thank you, Jason. Yeah. What about you, SHOGO?
You know what? Actually, I was working for the government of Japan, which is probably one of the most conservative government ever in the world. But now I'm in Web3 industry, so then completely, shifting from traditional world into a non-traditional world. In my principle, I definitely believe that the government should set the proper regulation for the local people, and then when it comes to the Africa, so we have 54 countries, and then I would say maybe South Africa is way ahead because they're accepting English and the British the regulatory framework, so that they set up the regulation for the local exchanges. And then if you have a regulation, that means you have a freedom under such a regulation. If you don't have a regulation, you could do whatever you want, but you might have a threat of being accused later. Look at the USA. I mean, I don't want to talk about the US, but the things could be happening. There's so many things like that unfortunately in this kind of Web3 space. When it came from Japan, when the FTX incident happened, because the government, they set up a very high standard regulation for the exchanges and also users and for the exchanges. So then actually it secured so much protection for the individual users. So then the people who still have their digital asset in the FTX in Japan, but they don't really have to worry about their getting back their the digital asset because of the given an FTX incident. So I'm pro regulation, and I definitely love to work with the regulators because that's giving the much freedom for the people.
Thank you so much, Jojo. Yeah. What about you, Toby? Yeah. What's your point of view on the regulation?
I would agree, and I would probably take it one step further as saying regulation is essential. Because what is DeFi? And what is TradFi that dresses up as DeFi? And let's just look at Celsius. I'm not sure that had anything to do with DeFi. I've got to be honest with you, that's about as centralized as it came. I think Alex Mashinsky was sitting around with a whole load of investor money going, oh, what should I do with this today? Including buying a house. Now, that's TradFi dressed up as DeFi. And so regulation comes in a whole load of different levels of implementation. It can be high level and light touch, and then it can go all the way down and have a much deeper level of integration. I think the first framework that needs to be set out is to actually determine what is DeFi and what is not DeFi. And if it's something dressing up as DeFi, whereby the actors involved can take advantage of investors because the investors believe that it's decentralized, there isn't a central body that is literally able to steal their money, like Sam Bankman-Fried. And so that level of confidence is being falsely offered to those investors. I think the first high-level part of regulation needs to be to determine exactly what it is, because otherwise the industry is going to continue to get attacked time after again, because people will be able to take advantage of the investors by instilling in them a false sense of confidence that something is DeFi that it is not. And if you look at Europe, when it comes to the payment licenses to bring fiat in and out of crypto, by way of example, I'll just try and throw a real world use case to you. A lot of European countries have adopted this high level of regulation in virtual asset service provider licenses. And they've come in because they don't understand it. They've come in because it's light touch regulation whilst they begin to learn it. And now MiCA is now being rolled out. There are upgraded EMIs in Singapore and across most of Europe, so you can attach a VASP to an EMI. And this is a progression of regulation as the regulators become more and more au fait with what the underlying assets are. And I think we need to start there with this high-level regulation in the first instance, and then it should get deeper and deeper, whilst maintaining a balance of protecting investors whilst not stifling innovation. That's the key.
All right, very well said. Yeah, Toby, thank you so much. Yeah, what about you, ARRAVIND? Yeah, what's your point of view on that?
Yeah, I think I completely agree with Toby, right? The top level itself. First of all, let's look at just Southeast Asia, right? Bitcoin is having an identity crisis, right? So Malaysia regulated it as security. In Singapore, it's payments, and in Indonesia, it's commodity. So we have this identity crisis, right? So in the top level itself, we can't get a consensus, right? So that's going to make things further down even more difficult. So I also agree that regulation should lag innovation. It should not lead innovation. So regulators can provide more sandboxes, should be able to relax certain areas where innovations can happen. And I think we can see this happening, right? For me, CZ was a hero, right? A lot of them saw him as a villain, but when there is a lot of ambiguity, right? When there is a lot of uncertainty, he poked enough places, right? To realize, you know, where it would, how far you can go. So it sets a precedent for others to follow. But I feel it also comes down to the industry itself, right? To help the regulators with policies, right? We don't have to go on to a full-blown policy. We can start with small policies that help regulate small areas before we, you know, take on the whole space.
Right, yeah, thank you so much, ARRAVIND. Yeah. In terms of the innovation, yeah, how banks, investment firms, and traditional finance institutions are exploring the DeFi technologies?
Okay, so yeah, they are exploring the technology, right? But it also, exactly like what Toby mentioned earlier, the trade files are bounded by the regulators, right? So what they can do currently, they should be partnering up with DeFi protocols, you know, try to help them with onboarding, offboarding at least, try to participate more in policy making. And I think the trade files, let's go back to DeFi, right? Let's look at the fundamental of it. You're supposed to remove the intermediary. You're not supposed to have a middleman, right? As much as possible, we want to enable the peer-to-peer transaction. We don't want banks to be involved. That's the fundamental of it. But we are quite far away from it, right? And you want the banks to stop thinking that their methods of investing or their methods of you know, getting into the market is right. And we want to change that. And the only way we can start doing this and start onboarding new investors, more tech-savvy people, is by start giving them small exposure to crypto assets, right? Letting funds explore Bitcoin, letting fund managers have access to crypto in their portfolios. So I think small things like this will make the larger changes along the way.
Yeah, thank you so much, Arvind. Yeah. And what about your point, Toby? Yeah, what do you see in the DeFi technology, how the bank is going to adapt to that?
I've got absolutely no idea. Like zero. I don't think they have an idea. And it goes back to the point of regulation, because if you've got the regulators looking at a true decentralized application for finance, they're like, well, you're getting paid a yield, there's no central authority, how are we going to tax that? How are we going to check if there's enough liquidity provision in it? Because if you think everyone goes, well, that was a rug pull. It's like, no, there was no liquidity in it. So people lost their money. They go, right, like Silicon Valley Bank, no liquidity in it. It shut down. But there were regulations in place so they could shut it down when they could see that the level of liquidity dropped. They can't do that in DeFi. So before they can start to get their heads around this problem and figure this out, so that they can't pull the fire lever and pull out that extinguisher, they can't, it's not possible. Can't protect the investors at that level. Okay, this is an issue. So okay, but maybe we can put controls in place. It's not DeFi anymore. So I don't have the answer to that, but I do have the answer to the fact that coming back from the UAE, very recently and speaking to a lot of institutions and banks there, they're exceptionally interested in this space. And I believe they're all trying to figure out the answer to your question as well. But they also definitely don't have the answer today, because they can't do it unless the regulation allows them to do it. And there's a bit of a disjoint here. That doesn't mean they're not interested to solve the problem and roll it out.
Thank you so much, Toby. Yeah, SHOGO, what about your point of view on that?
Well, I have no idea. Well, but the thing is, okay, in the case of Africa, it's a cash-dominant the continent. Because 92% of the transactions that happen by cash, and then people still love to use cash. And then that's partially because not so many people have access to the technology, that's one. And secondly, people trust cash still, maybe, even though the the fluctuation is really, really bad on the local fiat currency, but still. But let's see. But I'm actually seeing like a lot of like traditional banks are getting into the DeFi sector. For example, like the Standard Bank in South Africa, they are one of the biggest investors for the Web3 space. And then also like they have the specific division for the Web3 development. So they want to actually pursue their own Web3 solutions within the bank. So that's a really good step. But what I'm kind of thinking is, do banks really have to get into this field by themselves? Because in the case of East Africa, the people use M-Pesa, which is the mobile money, started from Kenya, and the Safaricom, which is a subsidiary of the Vodafone, is issuing such an M-Pesa, which is pegged, of course, like a Kenyan shilling. But you have the 50 million people using M-Pesa because it's very easy, very effective, very efficient, because you don't really have to have a smartphone. Even like, the ancient phone, you can actually transfer the money to like someone else and instantaneously. So then I think the banks don't really have to take such kind of responsibility to do like such kind of the DeFi innovation, but because other institutions are working and they are much more innovative. So then I'm definitely happy to for these innovative telecom companies and also like startups, just a little innovation.
Thank you so much, Jojo. Yeah, very well said. Yeah, what about you, Jason?
Yes, I think it's a really sticky situation, because further to Toby's points, even even if there were a way to figure out when would be the right time to pull the plug on a protocol because there was enough liquidity, you wouldn't know what to do next, right? So for example, like when you shut down a traditional bank, then the FDIC would come in and make sure that certain investors were made whole. What would be the equivalent in a DeFi situation, right? And then how do you ensure that everybody agrees that there's not enough liquidity, for example, right? So like the whole definition of having everybody having their own voice essentially makes it sort of impossible to create those structures around what you would need in order to have any sort of rescue for those, DeFi degens, for example.
Right, yeah, thank you so much, Jason. Yeah, and in terms of the innovation, yeah, how DeFi innovation and technology have influenced traditional finance? Yeah, ARRAVIND.
I think they have literally scared them, right? In a nutshell. So, like what we've seen, right, in the past, the traditional finance had their own ways of doing things, and under the pretext of protecting the investors, right? And they realized there are services that are now beyond their control. So when they try to intervene, it's becoming even harder for them, right? So the industry goes deeper and deeper, and it's going to be very hard for regulations to catch up. So I think we need to solve the main problem here, right? To solve the underbanked, to solve the unbanked. So that's why DeFi is there, to give you a new opportunity into the financial services, right? So if what the banks or what traditional finance have been doing all this while, why do we still have underbanked, right? If there was inclusivity, so let's look at basic things like KYC, for instance. You don't have a KYC, you can't open a bank account. So that's why if you look at regions like Philippines, you look at Indonesia, we have up to 60-70% of the unbanked population just because you don't have KYC. And DeFi gives the inclusivity to all this. And I think those are the innovation. We want to make that onboarding easier. We want to get the education out there so that how this new generation of investors can onboard financial services like loans, mortgages, and so on. So I think that's what we need to see. We need to see new innovations where it allows a normal person like our parents or our friends to get on board this new wave.
Yeah, thank you so much. Yeah, what's your point of view on that, Toby?
I hope I don't offend anyone in the room that works for a bank here. I think banks and institutions will flog any product that they can get their grubby little mitts on that earns a pound note as long as they're allowed to do it, even to the point where they have regulatory backlash afterwards. I mean, we all know about subprime mortgage packaging. I mean, this is the fact. So I think the interest from institution in DeFi is, oh, can we actually package something up here that we can flog? I think that's what it comes down to. I think that we have to draw a clear distinction between what is DeFi and how does that interact with institutional, and what is blockchain technology and the use of blockchain technology for institutions. And 2-second story. Last week, sitting with a friend of mine, and he was sending $6-figure US dollar sum from his HSBC Hong Kong bank account to a counterparty also holding an HSBC account in the UK. The funds had not arrived after 6 days. He calls up HSBC in Hong Kong, and he's got one of these little back-end panels, and it actually tracks the payments. And they said, where's the money? Counterparty, beneficiary hasn't received. He says, oh, it's stuck with another beneficiary, and they are requesting further information on the transaction. He said, the beneficiary holds an account with HSBC. And he said, yeah, but we've used the SWIFT network, and we go through a third-party beneficiary that is not HSBC. He's gone, what? Sending from HSBC to HSBC, what are you talking about? It's gone via Lloyd's Bank? And they're like, yeah, it's gone via somewhere else. So, these legacy systems that are set up that exist today they're archaic, and we're paying for the pleasure of it. It's $30, it's 24 to 48 hours, should there not be a problem like what I just told you had occurred. And this is right to be disrupted, because if you could look at replacing the SWIFT system with blockchain, where the cost of a transaction, as effectively messaging, was almost instant and was a fraction of what that cost would be. Now we start having roll-ups introduced, and so on and so forth. That's revolutionary. And I think these are two very particular and distinct matters. DeFi relies upon blockchain, but blockchain can solve a lot of these other pain points that we see in the market today. Institutional interest in DeFi, I'm absolutely sure it's just another product that they want to sell and make fees out of it.
Yeah, I see. Yeah, I do agree with you as well. Yeah, as nowadays, yeah, if you ask yourself, how many times have you actually go to the bank booth? Yeah, this year. Have you gone to the bank this year?
Oh yeah, I did.
Oh, for what? Particularly reason?
Yeah.
To cash out and put in
To
crypto.
ATMs, yeah, to do withdrawal. I was at the ATM yesterday, yeah, to do withdrawals. Yeah, I think basically that's much, right? So now we have got e-wallets that solves a lot of your issues. Malaysia, we are quite privileged. We are overbanked, I think. Unbanked population is 8%. Foreign workers have got their bank accounts, so we are, each one of us easily carry about 6 to 7 e-wallets with us. So it's a mess, right? Yeah, so I think e-wallets helped a lot, and I think the next transaction is we want it to be borderless, right? I want my e-wallets to be used in other countries, and I think this is where the DeFi or where cryptocurrencies can play a bigger role. Yeah.
Yeah, I see. Yeah, what about you, SHOGO, sorry, yeah. Yeah, the DeFi innovation, yeah, does it have any influence toward the traditional finance?
Yeah, I kind of agree with the IB. Well, in this sense, well, when I'm thinking about how the innovation actually to be defined in the Web3 space, well, the innovation is something which can solve the existing issues that cannot be solved with the previous technologies. So then the Web3 is the relatively new technologies, and obviously, and we only have maybe 15 years of the history, but it has solved so many problems and issues and the challenges, especially in the financial sectors. I'm dealing with African people for the most of the time. Then well, there are still 1 billion people who do not have a proper identity, and 62% are coming from Africa. I believe you have ID, some sort of IDs, and probably in this room. I have my passport, driving license, and many other types of the IDs. But still, many people do not have a proper kind of IDs. What's the problem about this? Because you cannot verify yourself. So even if you go to bank, you can't open a bank account. 31% of the African population do not have access to any sort of finance. Bank account, mobile money, any kind of digital asset, you don't really have have access to those things. But blockchain is different. Well, like Abby said, maybe we don't really have to go over any kind of the complicating KYC process. But still you have access to the finance. Well, DeFi is sort of innovation because you can open up an account instantaneously with your email. Well, I don't really think a Gmail is asking you to show your the proper identity to have one email account. So even if you don't have an ID, but if you can show somehow your credit score in some way, maybe you have access to the finance. I think that's a sort of innovation maybe we should talk about, and especially in this space.
Yeah, thank you so much, Jojo. Yeah, what about you, Jason?
Sure. So I think, again, like I said in the beginning, it's really important to remember that, that DeFi was invented to solve problems that traditional finance is not able to solve, not unwilling to solve. It's unable to solve, perhaps due to regulation, due to lack of identity, things like this. So it's not, to the extent that there's an overlap, it's completely unintentional, right? And it's not, there's not a lot, I think, that DeFi can benefit from traditional finance. It's more so the other way around. It's more so sort of traditional finance trying desperately to catch up with the way DeFi is sort of streamlined a lot of things. So I'm not sure, again, whether there's a lot of overlap that is beneficial from the perspective of DeFi. So I think it's really important to remember that the overlap is more from the perspective of traditional finance trying to just co-opt things that are standard in DeFi. Once DeFi has figured out how to solve a problem that traditional finance has not really been able to solve, like I'm not sure what role traditional finance has at all in there. What the point of it is, really, and what value it can bring, with the exception perhaps of additional liquidity and sort of having that bridge of liquidity from traditional finance into decentralized finance. But of course, even that, things like pools and can fill up that missing structure that DeFi might have. So I'm not really sure, again, where there's an overlap and if there's any benefit at all to DeFi.
All right, very well said, Jason. Yeah, thank you so much. Yeah, let me ask you, can traditional finance institutions maintain their centralized structure while participating in the decentralized finance ecosystem? Yes, Jason.
Yeah, again, right, so they're almost diametrically opposed, right? So if you consider the principle of DeFi being non-centralization, I'm not sure how there's any areas of synergy between that and a fundamentally centralized system and a fundamentally regulated system. So I'm not sure how much there could be a lot of cross-pollination of technology. Traditional finance could certainly adopt things that are working in DeFi. So for example, smart contracts and blockchain, but as really sort of try to pigeonhole a solution after the fact, rather than sort of building something from the ground up that actually makes sense.
Yeah, thank you so much, Jason. Yeah, what do you have, SHOGO? Yeah, what point of view do you have about that?
Yeah, definitely. So then, I think the question is, can the central bank, the banks maintain their the
Centralized
the
structure.
centralized structure in the DeFi structure? Well, yes, definitely, they would. But the level of the engagement will be, I think, decreasing. What does it mean? Because sorry, I'm always talking about Africa, but the people from Africa is going out of the continent to work. So then we have 1.4 million African people working in the United States now, and the number is actually increasing after the COVID and also the Ukraine crisis, because the Africa depending 75% of the wheat import from the Ukraine and Russia, and then of course we get so much inflation in this continent, and then so they want to work within a continent, but they can't earn enough money to just the feed for their families, so that's why they need to go out and then go to Europe and the US. So that's why 1.4 million right now. Okay, so they need to send money to their family back in the home country. So if you want to send $1,000 from the US to Nigerian family, and then they will charge in the traditional finance way 20%, 15%. So if you send $1,000, when the family is receiving the $1,000 actually changing to the $800, because the commission fee is 20%. So that's why people is still using the crypto way, because it's instant first of all, and of course the commission fee is extremely low. You can send your money to the family with 0.2% of the commission fee, and then actually dependency of this crypto way of the transfer is actually increasing. Currently, we have 5% of the total the cross-border remittance happening from the US into Africa. So then I think, so in a way, when I say can a centralized bank structure to be maintained, yes, of course they would, but the engagement will be decreased because people started choosing such a way.
Thank you so much, SHOGO. Yeah, what's your point about the centralized and decentralized, Toby?
So I think it probably comes back to what one's definition we're discussing of DeFi is today. And if we're referring and we're bucketing up legacy, replacing legacy payment rails and systems using blockchain technology as DeFi, I think that it has a very central role to play in it along the terms of the analogy that I gave earlier. If we're talking about DeFi being lending protocols and effectively decentralized financial products, then my point would be that I very much hope that institutional money finds a way to come in, because I wouldn't trust my mother to invest $10,000 of her money directly. And I think that we are seeing that we're hitting glass ceilings with every bull run. And it's, okay, that was the retail investor bull run. And now my mum just bought $10 of Bitcoin, but she's not going to use a DeFi product. So how do we keep on pushing these glass ceilings out? And how do we keep on driving liquidity into the market, which is its lifeline for its growing? Now, we're all in the middle of a miniature bull run on Bitcoin, and whilst nobody can directly pinpoint as to why it's happening, there is a good chance it is happening because it looks as if the SEC is being beaten in the courts, and they are going to be forced to allow ETFs to be issued. Now, to be clear, whilst that isn't, in my opinion, a DeFi product, you're now seeing $22,000 to 40, we have 40 today. So $40,000 just on the news of institutional money flowing into crypto. So if it is possible to figure out a complementary relationship between the two, once again, goes back to regulatory frameworks, I think we've done that to death, then upon that basis, you will see significant inflows of capital far greater than, oh, our market size is 1 trillion, to which, to everyone in this room, that's a hell of a lot of money. But in real world terms, $1 trillion is a drop in the ocean. Compare it to the insurance sector. So it's upon us, we must, it's incumbent upon us to try and figure out a way to educate the regulators, to figure out a way how institutional can come into DeFi for the sake of DeFi, for its growth, for its survival almost. And those are some of the pain points that we look at that little table over there with that giant Norwegian man who's the genius in the room. I'm just the PR guy. How we can solve these things to exactly achieve that, because that will determine the size and the longevity of this market.
Yeah, very well said, Toby. Yeah, what about you, ARRAVIND? What do you think about that?
So I think, the centralized system and the blockchain technology or DeFi, they will coexist for some time, right? I think DeFi is still at a very infancy stage. If Toby is looking at a institutional side, I'll give you an example on the retail side. Payment rails, for example, right? So we operate in 3 countries. So I have a business, an e-commerce business that we operate in Philippines and also in Indonesia. So we move money, right, from one country to another country. And I think what the technology has done, we are now able to service a global market and to move our own liquidity. So this is where the issue is, right? Of course, crypto is faster, it's quicker, right? But there's a 5% onboarding charge, right, in the Philippines. And when I bring that money back, there's a 5% off-ramping charge. Now I got a 10% charge. Now I'm considering to go back to the traditional bank. They charge me 3%. Screw it, 3 days, I'll wait, right? So I think they will coexist, right? So there are certain services that DeFi is advancing, and there are certain areas where, there is still a lot of improvements to be made. And I think this, I would speak on the retail side. And it has been a very speculative area for a lot of them on the retail side. So, of course, we're talking about the pump, and, they are going in, farming liquidity, and people are interacting with DeFi just for airdrops. And this is where it is at the moment, where the real use case is really not yet fully rebuilt.
All right, 2 minutes, 56 seconds. I'll give it to you because no one in the room knows what I'm just about to tell you, but they never got us to sign an NDA, so they're lost. For 9 months, we engaged with Grab. Everyone knows who in this room with Grab is, and I mean at sea level. We pitched, advised them, taught them about blockchain. Unfortunately, COINWEB had not launched DevNet in live production at the time. Came up with 50 documents of explainers and education, mostly which Knut wrote. Same pain point as what you have. I need to get fiat into crypto. How do I do it cheaply? Credit card fees, anywhere between 3.5%, 5%. Okay, so that's slowing that down now. Fiat off-ramping, subject to local banking rails, they come up, they come down, no continuity of service. Grab, we say to them, you've got a problem. What's the problem? Everyone that goes and takes a Grab car, does a booking, it's attached to your credit card, it's nailing you out on an individual fee every single time. Grab assumes this fee. That is the difference between profit and loss for Grab. If they can do away with this fee, and they're a publicly listed company, they reversed into a SPAC, at this point in time, they can become profitable. Now, anyone that has an idea of public markets, you know exactly what that means and what it does to your share price. So we came up with a model, we're a bunch of ex-telecoms guys, to buy bundles up front of tokens that replace over time the fiat in the wallet. Now, if you buy a bundle of tokens for, let's say, $10, $20, $50 at a time, you're less inclined to use credit cards to do that. We could set up local bank-to-bank rails, which is at a fraction of the credit card cost, because it's a longer journey to do it. It's got to go from your app into the banking app, and then you have to come back. Well, that's fine if you're going to spend a bit more money. You don't want to have to do that every time you're jumping on a Grab bike, right? But how do you incentivize the customers to do that? So that's then where we attach loyalty tokens, which can be then converted to other goods and services within their platform that the customer actually has custody of and can cash it out. Those are the subtle differences between Grab points and a Grab token that the user is then earning. Result, to incentivize the customers to buy in bundles, using bank-to-bank transfers, mitigating the higher costs of credit card processing equals a profitable public company compared to a loss-making one. I think they just broke even. So we did that for 9 months, and that's what they're considering. As I said, if there's anyone in the room for Grab, don't try and sue me. You didn't get me to sign an NDA. So there's a use case for you.
All right, yeah, thank you for the insight, Toby. Yeah, very nice. Yeah, okay, last but not least, yeah, last question here. What do you foresee as the future relationship between traditional finance and DeFi in the next 5 years? ARRAVIND, yeah, what's your point on that?
Yeah, so I think they will continue dabbing, poking into the space, trying to hold back innovation as much as possible, like what they always do. I'm sorry if there's any regulators here. But I think this is part of their jurisdiction, right? So they are doing based on what's mandated to them, what is protecting the investors. And of course, I think they are now more open to explore, to understand. As what I mentioned earlier, I think we need more regulatory sandboxes for people to go in, test out the innovation in a more relaxed space. And so that they can understand the underlying technology, they can understand how each step along the way takes place and allows them to create clearer regulation around this space. Yeah.
Thank you. Yeah, what about you, Toby?
In a one-liner, education, 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 and then moving to scoping and speccing. And if we get that far to building, and then the very, very painful process of back-end integration with legacy systems. That's it, very clear for me. Should we be successful?
All right, yeah, thank you. Yeah, SHOGO, yeah. What do you foresee in the next 5 years?
Yeah, definitely. I usually spend like 2 months in Africa and 1 month in Dubai and the rest of the country. That's my cycle. And then I love to travel to Nigeria quite often, which I'm actually doing so. So that every time I come to Nigeria, I check the the central bank rate of the local fiat currency against the US dollars. Okay, 2 years ago, $1 was equal to 40,000 naira, and the market rate was the 70,000. And then last month, the central bank rate was 75,000 naira, and the market rate was 125,000. So there's still a huge gap between like a central bank rate and also like a black market rate. But people are actually using the black market rate in the country. So people do not actually trust like a local the currency in Nigeria. And then such kind of a movement is actually accelerating the adoption of the crypto and also like a decentralized finance. Senegal started using Bitcoin. And if you go to Senegal, you can buy like a lot of stuff with the Bitcoin. And the merchant accepting Bitcoin is massively expanding in the country, and which could be like spread it out to the other Francophone-speaking country. Because Francophone-speaking country in Africa, we count like 24 countries, and then it is still French colony because the French central government is coming into the meeting with the other central banks of like Francophone Africa, and then they actually give a direction. The Central African franc, which is a currency used in Central Africa and Francophone countries, they're designed by French, they're pegged to like the euro, and which use like a franc, and then still they're getting advice from the French government. So I think the currency dominancy is going to be end, and then also the adoption of crypto will be massively increasing in 5 years. Thank you.
Thank you so much. Yeah, Jason.
Yeah, so I think a lot of the funds that are currently locked up in traditional finance will start over the next 5 years figuring out a way to move into the DeFi world more. And I think that the DeFi world will start building guardrails that would protect retail investors to the point where sort of traditional finance over the next 5 years will become much less useful for the average people. I think a lot of the gaps that traditional finance has will sort of be filled with DeFi, which is already happening. But then I think on the flip side, a lot of the guardrails that traditional finance has right now will make its way to DeFi, and then pretty much make it easier for people to sort of interact with the DeFi ecosystem. And then over the next 5 years, probably eliminate the need for traditional finance altogether, perhaps.
Wow, yeah, thank you so much. Yeah, I'm also the believer in decentralized finance as well. Yeah, as it's more effective and is unbanked the banked and bank the unbanked. Yes. All right, yeah, thank you so much. I hope you guys have learned a lot today. Yeah, as me, myself too. Yeah, thank you for the insights from all the experts today. Yeah, thank you very much. Yeah, I'll pass the next session to May. Yeah.